Let me tell you why I do this show and why I wrote How to Make Money in Any Market. For most of my life, pretty much everybody in America recognized that picking individual stocks was a fantastic way to get rich, as long as you did it right. Not everybody agreed on the right way to do it, but practically everyone accepted that it was certainly worth doing. Then the dot-com bubble burst in year 2000, and picking individual stocks suddenly went out of style, at least for regular people. Suddenly, there was a new conventional wisdom on Wall Street, the conventional wisdom of index fund supremacy. Almost overnight, legions of experts, backed up by an endless parade of non-investing journalists, came out of the woodwork making a pernicious argument that you are either too stupid or too imprudent to manage your own money. They claim that it's more or less impossible to consistently beat the market, so you might just as well park all of your money in an index fund that mirrors one of the major averages, like the S&P 500. The more extreme index fund absolutists like to say that no one can consistently beat the market, and if anyone looks like they can or say as they can, it's pure luck. That means picking individual stocks is nothing more than gambling, where you have no edge. So why not settle for an index fund that can consistently give you 8 to 10% annual return? Sure, you won't get rich, but you'll steadily make money over time. I like that. After the dot-com bust and then the financial crisis, that argument became pretty darn compelling. This is the ideology, though, that is absolutist, and for that, I think it's wrong. I've been fighting it since Mad Money first went on the air. Why? Because as I explained in How to Make Money in Any Market, it doesn't work. If you're willing to do the homework, and it's never been easier to learn about the companies behind your stocks, individual stocks can change your life. They can make you rich in a way that no index fund ever could. And it happens. I have seen it endlessly with my own eyes. And hey, it's absolutely possible to beat the averages. Take the S&P 500, the benchmark of all benchmarks. There are 500 stocks in the S&P. Most of them are not all that good. In fact, at any given moment, I don't think there are 500 good stocks in the entire market. So when you buy an S&P 500 index fund like the SPY, the SPY, you're buying the good with the bad, which brings me to the unvarnished truth. You will most likely not get rich just by owning index funds.